What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Today is Monday. Happy Monday. This is Bitcoin Fundamentals Report Day, the day that I put out the most comprehensive Bitcoin newsletter called the Bitcoin Fundamentals Report. And then we go over it here in a live stream. And, the chat is open for you guys to put your comments, questions, concerns. I'll try to get to them at multiple times throughout the show here. I am live streaming on YouTube, Rumble, Twitter, and Telegram. The main community is on Telegram. All those links should be down in the description on my pinned tweet, places like that where you can find all the different parts of the community. So thank you guys for joining me. Let's jump right into it. I will share my screen, and I am muted on Telegram. Sorry, Telegram, I was muted. I am back. All right, let's share the screen. Bitcoinandmarkets.com. Can I switch this? There we go. Gotta make it. Still getting used to all of the different stuff on the back end of Restream, my streaming platform or my streaming software that goes out to all the different platforms. But here we go. Bitcoinandmarkets.com. Sign up to get on the email list for free. All of my free content comes out. I put about 4 or 5 pieces of free content every week, as well as a premium piece of content. And we have other perks for just the $5 members that want to support independent quality Bitcoin content. And you get a couple extra perks with that. So I appreciate everyone that supports the show. Check out bitcoinandmarkets.com and sign up. Let's jump right in here to the Bitcoin Fundamentals Report number 303. And how big can I make this? All right, so let's get down into here. Quick navigation. You guys can go to any different part. If you just want to know what's going on with price, mining, layer 2, whatever, you can jump to those sections. But we're going to go through all the different headlines, macro, price analysis, mining. There was nothing significant to report for layer 2, but we will typically go through that. All right, let's go down here. New discount here for people that are thinking about becoming a members. You can get 50% off your first month with this link right here. So check that out and support independent Bitcoin content. Okay, snapshot of Bitcoin. Weekly trend is chop. Lots of people have been talking about this. We are going to go over price, see when it's going to break out, if it's going to break down first before it breaks out. What should we expect for the price? But not just the price, but everything's choppy. There's not much going on with the news cycle, with the Bitcoin news cycle specifically. Even with macro, we're kind of at a really quiet period here for macro or Bitcoin content or news. And the only thing that I've seen recently has been political stuff. So, we don't really cover that too much on this podcast, but everything is choppy right now. And I would say that's the main idea for Bitcoin and macro. Media sentiment is indifferent because it's just not much going on. Network traffic is very low. We'll take a look at the mempool and the hash rate and difficulty and stuff down there. Mining industry, very low revenue. I've seen a lot of headlines about August was the lowest revenue year to date. Monthly revenue year to date. And that's not surprising because we have been consolidating sideways to down in a very massive bull flag for 6 months. If we go back to January, price is down there at, what was it, say 40,000. So we kind of rose up here. Then we had the halving, and now we're just trending down since the halving. So, of course, August is going to be a low month. But overall, it's kind of a stressful time for miners, and I'm waiting for the price to go up. I'm sure they are too. If they're, have seen on their books, like we have 2 months worth of runway left before we had to start selling our coins and stuff like that. So very low revenue time here for the mining industry. Price at the time of writing, 58,545. We will take a look at the live chart down below. Over $5,000 down on the week, or 8%, but it doesn't feel like that to me. It just feels like sideways because we have been at this 58,000 gang for a long time. And we are just still sitting right there. Market cap, 1.1 trillion, still above the $1 trillion mark. Satoshis per dollar, 1708. One finny, that's my denomination, 1/10,000th of a Bitcoin, right in the middle of the decimal places, $5.25. Mining sector, previous difficulty adjustment was a week ago, and it was right at plus 3%. The estimated next one is in about 8 days at plus 1%. Mempool sitting at 132, slightly down from last Monday, where it was 137. But it's just very, very flat. There has been nothing going on with the mempool, with transactions. Since we did have that big spike, I think it was on August 22nd with the Babylon layer 2 staking. Since then, it's been extremely quiet, and we're just slowly chewing through this mempool. Again, 132 megabytes. Fees for the next block, 33 cents or 4 sats per virtual byte. Pretty much the cheapest you're going to see it. And you can't save any money even if you want to wait an hour. So this is very, very cheap. Lightning Network, interesting. We were plus 1.1% last week, and this week on capacity, we're also plus 1.1%. So the capacity is going up. However, channels continue to sink, now almost down to 49,000. And these are public channels that are discoverable out there. I don't know exactly how mempool.space, or this is actually from 1ml.com. I don't know exactly how they're measuring this, if they somehow are trying to find Tor nodes or Tor channels or whatever that would be for Lightning Network, hidden private channels, or are they just doing the public channels? But yeah, public channels just continue to decrease here. Okay, so that was snapshot of Bitcoin. Let's get into the headlines. All right, Bitcoin right now, this meme, I talked about this on Friday, just going back and forth between, now I'm down to 58 and 60, back and forth. But we're building up to something big in September. I think there is something that's going to happen this month. Typically we have October, October being a very good month for Bitcoin. I talked about that, wrote about that last week in a couple of pieces where, with the halving moving forward slightly, perhaps some of those Q4 gains will be shifted a few weeks earlier, maybe a whole month earlier. So October might become, half of September is an up month. So I think something big is building up in here in September. Every time we go through these quiet periods, something breaks, something snaps. And if you look at, like, say, the weekly B bands, they're getting very, very tight. And every time that happens, volatility is just around the corner. Okay, post-halving performance has been painful. This week, in a tongue-in-cheek tweet, I reposted this chart and said, worst cycle ever. From the halvings, this cycle has been the weakest price performance yet. However, it's not the quote-unquote worst. Bitcoin also had the best pre-halving performance. It all balances out onward. So take a look at this. You can see way down here, this black is the lowest that we have been in any cycle from the halving. But remember, we first time hitting an all-time high before the halving. So everything balances out, but it just feels like this is the time in the market where, it's that guy with a stick poking at Bitcoin saying, do something. And pretty soon we're probably going to get that big green candle that smashes him in the face. So, all right, moving on. Altcoiners capitulating. Eric Wall is a famous troll and altcoin scammer. How he still has any clout in the space is beyond me, but he is a great example of the total despondency in altcoins. I posted this on Telegram this week. He says, my thoughts on the crypto markets stream of consciousness. Bitcoin seems like it's poised to become the asset many has wanted for a long time. That's bad grammar, but you can see what he's saying. In a world that is getting increasingly complex on all fronts, Bitcoin is even starting to stick out as simpler than fiat, simpler than crypto. It's just to get that quality, it's starting to get that quality that gold has, where it's just a unit of something that stays that way. That's what Bitcoiners have been saying for a long time. Fixed supply. You get your amount of the fixed supply, you get your space on the blockchain, on the UTXOs, and that's the main selling point of Bitcoin. Now, it sounds simple, but to get to that point, Satoshi had to combine a lot of different technologies. He had to combine cryptography. He had to combine proof of work. He had to combine mining and how to move a decentralized consensus forward, block to block, through time. So he didn't. I guess the one thing that Satoshi might have invented is the difficulty adjustment, but he didn't invent any of the other individual pieces of Bitcoin. He just put them together in the right sort of way. It's very, very complicated, but it turns into a simple thing. It is a complicated thing to create a simple effect. Digital scarcity. 21 million. That's what it does. And you can trade it, you can or exchange it with censorship resistance on the main layer. So, I mean, that's the very simple part of Bitcoin. Now, crypto, they tried to take what Bitcoin did and slap complexity onto it. So he says here, it's everything is more complex, seems way more complex. Well, that's true because it is. And every time they added something, they didn't tell you about the trade-offs. Every little bit more complex in Bitcoin has a big trade-off that goes along with it. And so you have some of these chains or some of these networks like Ethereum, Solana, Cardano. They're supposed to do all these smart contract platform things. They've made so many trade-offs that they didn't tell you about. And that's why they're not coming to fruition. All their promises were false promises. And that's what a lot of people in the altcoin side of the house are coming to that understanding right now. And this is a great example of it. All right, Cardano is another good example of what is happening in the whole altcoin scam complex, built on lies and preying on the undiscerning. This chart encapsulates the sentiment around altcoins right now. Second spike in the bull market, didn't get nearly as high as the first time, and it has just been a slow bleed out. Also, in the pregame show on Telegram, I do like 5 minutes before we go live with the Telegram. I was talking about how all of these retail traders that pumped all these altcoins, they're gone. They don't have their stimulus checks anymore. They're actually broke, and we're going into recession. So this secondary pump for a lot of these altcoins that didn't even go as high as the first pump, that was reliant on stimmy checks and YOLO and retail. Those retail people are not coming in. They're not here now. They're probably not going to come in till the very end of the cycle. But yeah, these guys, they're just bleeding out. And a lot of the people holding this crap like this are figuring it out. And they're going to be going either back into dollars or back into their currency, their local currency, or they're going to just go into Bitcoin. Because as Eric Wall says, Bitcoin is looking simple and everybody gets it. And it's just the way it is. And it's gold 2.0. That's a very simple selling point. Okay, moving on here, we have Binance CEO denies allegations of mass freezing Palestinian crypto assets. And the bullet point is linked to my source here for this. It's from bitcoinist.com. And quoting directly from that article, online reports allege that Binance, the largest exchange by trading volume, had mass frozen assets of its Palestinian users. The report, made by No One's CEO and Paxful co-founder Ray Youssef, stated that the exchange has, quote, seized all funds from all Palestinians as per the request of the IDF. And you can see then here, I just included this image showing Binance and 44,000 coins leaving off of the exchange in relation to this story. I don't know if someone's come up with a different theory around these 44,000 coins, but this was in relation to the story. Continuing on quoting that article, amid the backlash, Binance's CEO addressed the situation. Tang denied the report, calling it FUD, as, quote, only a limited number of user accounts linked to illicit funds were blocked from transacting. The CEO affirmed that the statements claiming that frozen funds from all Palestinian users are incorrect and emphasized that the exchange complies with internationally accepted anti-money laundering legislation. quote, just like any other financial institution, end quote. Tang also stated that Binance hopes, quote, for a lasting peace throughout the region, end quote. So we'll see how this develops, if it develops any further. There were also some speculations that this could go, if this was at the behest of the IDF, which is, I don't think proven, but there are some people that are saying that they have like actual documents, or at least digital copies of the documents. If this was, then the fear is that this will expand to other countries. And so, yeah, interesting development here. Again, not your keys, not your coins. Get coins off of exchanges. This isn't a good time to be trading either. So if you have coins on the exchange and you're trading in the chop, that's a good way to just eat through your balance on the exchanges. So just get that off, get that in self-custody, and then you don't have to worry about stuff like this. Okay, moving on. Macro headlines. Zuckerberg admits to working with Biden-Harris admin to censor Americans. Yet another tech elite breaking allegiances with the global elite. Okay, so this is one. If you're not familiar with my content, that sentence is probably going to be hard to understand. But the main idea here is building on Tom Luongo's Davos man. You have this kind of global Marxist elite, and they are Marxists, and they are represented by Davos, the big meeting in Davos, Switzerland, the WEF. The UN would be in there, the IMF, the World Bank, those types of organizations symbolize, the WHO is a good one, maybe the WTO, maybe not so much the WTO, but those types of organizations, they represent this kind of globalist elite. And they had the tech bros on their side for a long time. They also had the bankers in their pocket, or at least the bankers not caring so much about what these global elitists have done, because, bankers are quite arrogant, and they'll say, oh, we can just crash the economy when we want. We are in charge of the money. We can control everything. Well, guess what? In COVID, they found out they couldn't control everything. The global elite could lock you in your house. They could shut down your bank. They could do all this stuff. And so the global bankers, or I guess the Wall Street crowd, they have been revolting against the global elite. And the tech, very recently, with a lot of Silicon Valley and these tech giants switching allegiances over as well to the populist front, the anti-globalists, I would call them. They're not necessarily 100% on board with Trump, but they're against the global elites that they see, that Kamala and Biden and maybe the EU, the ruling party over there in Brussels, they are symbolizing this globalist elite, and the tech is against that. So they're not necessarily for Trump. I know that Elon, I think Elon has endorsed Trump, correct, in that live stream that they did, in the interview they did. But it's not because necessarily of Trump. It's because the other option, the globalist side, the globalist path, is so bad. So they have split. And this is just another example of a major representative of the tech elite, Zuckerberg, has switched now allegiances away, or is he starting to switch away from the global elite? And remember, he like funded millions, maybe hundreds of millions of dollars towards the Democrat Party in the last election, national election for president. So, this is a big deal. This is a very big deal. And that's how I want to see this. We can get into our discussions about free speech. Of course, free speech should be primary. That is our primary freedom, and then everything else kind of flows from that. Of course, Second Amendment, we need to protect the First Amendment, but everything flows from those very basic rights. And so that I don't want to get into that type of argument, because we all know it's wrong. If you're listening to this, you know that that's wrong. I just want to build out this idea that the tech elites are now really fighting the global elites. Okay, let's move on to the next topic. Fertility rate data for year-to-date 2024 has dropped, and it is horrendous. Um, if you guys don't listen to my stuff, I talk a lot about demographics because it locks in what's going to happen macroeconomically, what's going to happen with the global economy, what's going to happen individually in different countries. So, like if you know that a certain country's uh, fertility rate is 0.7, it's going to collapse pretty rapidly. But if they're at 0 point, or if they're at 1.8, maybe at 1.7, it's going to be a much longer time to feel many of the ill effects, maybe another 20 or 30 years. But if you're under 1 right now, you're going to start feeling the effects almost immediately, because you didn't get to under 1 like in a short period of time. You got there over the last decade or two with rapidly falling fertility rates. So fertility rate under 1 is you got 5-10 years before your entire economy is going to be in massive trouble. So anyway, here we go with this chart. It's pretty small, but I highlighted a few over here that are under 1. We have South Korea, Taiwan, Hong Kong, Macau, and Singapore. China is also just above 1, but they have a excess of males versus females. And so I guess it would be, should say it the other way. You have fewer females than males, and females are what count for fertility rate. So they have a 1.02 on this table, but really, if you corrected that for the male female differential, they'd probably be under 1. So that's why I highlighted that. And not highlighted is this 0.9 from Puerto Rico. I forgot to highlight that. That is, part of the United States. So I don't know why they would have that on here. I mean, Macau, that's part of China. So why didn't they just add that in there? I'm trying to see if there's any other like territories that are counted. But anyways, so there you go. There's that birth rate. And then I've shared this also with Telegram. So what do I say about this? A new study about income effect on fertility shows that fertility rises with male income, but slightly falls with female income. So if you go up here, that doesn't make it any bigger. So female income, this is lifetime income. And as you go further up on the lifetime income, the female fertility, it peaks about this 5 to 6 million range, it looks like, roughly, lifetime earnings. And then it declines, okay? And it doesn't for men. So it continues to go higher for men. But this is the reason why I find this interesting, is because people don't understand, at least I think they're wrong when they say that, we can have all of the social developments that we've had over the last 50 years and somehow solve fertility. I don't think that's possible. I think if we want to get back to a replacement level fertility and not continually declining we'll not only decline in population, we'll decline in technology, we'll decline in innovation, we'll decline in just economic output, obviously, standard of living, all these things. And it will continue to decline and get worse until it's fixed. So how do you fix it? You can't just say we're going to fix it by doing the exact same thing that we're doing now and just hope that it gets fixed. No, you have to change something. And a lot of people will probably try to change something by being progressive. They want to keep moving forward while fixing it. When what they should do is look at the rest of human biological evolutionary history and be like, what was that all about? How did they have high fertility rates and why do we have low fertility rates? Let's go back to the way that was done. Okay. So maybe it'll work by being progressive, but that's like a crapshoot. That's like, let's do some experiments and see if something is going to work. Or we can go back to the way it was done and pretty much certainly solve it. So anyway, that's just a little tidbit on demographics. That ties into Bitcoin because, if Bitcoin is going to take over the world, what world is it going to take over? Is it going to take over a thriving utopia and flying cars and going multi-planetary and all this stuff. No, it's not. It's going to take over a declining world. And the reason for that is because it's commodity money. Credit money doesn't work in a declining world. Commodity money works in a declining world. And so commodity money will be chosen by the market in that circumstance. So, okay, Chinese domestic pricing is paying the price. Okay, this is worded badly, sorry. For slowing global for a slowing global economy as it absorbs massive surpluses. So I'm also a big China bear. Most people think falling prices are a good thing, but they only see it from the consumer's perspective. Producers cannot stay in business with these types of year-on-year declines. Workers will lose their jobs and demand will fall further without incredibly wasteful government subsidies, so bailouts. The only way out is for China to allow an economic crash. And this goes into Austrian thinking about bubbles, the Austrian business cycle or the business cycle. You have this expansion and it's followed by a contraction, a boom bust. The bust is required, is mandatory, it is inescapable. If you have a boom, it must be followed by a bust. If you have a credit expansion, you have a credit contraction. And we have credit-based money. We had this massive credit expansion over the last 50 years. We will have a credit contraction, a credit bust. Now, you can put it off. You can kick the can down the road. But the only way you can do that is through incredibly wasteful government subsidies. You make it worse. You have this extreme sickness, and you can just take painkillers, or you can actually have some medicine. So the medicine is an economic crash. Creative destruction, that's the medicine. Government subsidies are the painkiller. So that's their two options. Okay. And but that also means an economic crash will also mean the CCP would likely be overthrown. And here is the chart that I'm talking about. As you can see, this is producing too much stuff. Domestic pricing for key products declined 10 to 55% compared to early 2023. So year over year. The big losers here on price is solar modules and lithium batteries. They are down 60% in price. And that's not good, remember, because producers are losing out. They're overproducing, overcapacity. It's just malinvestment. And it will be corrected. All right. Relatedly, we have the PBOC buying bonds to intervene in the rally of government bonds. This was corrected, I think, by I run the verbiage through ChatGPT just to check my grammatical and spelling errors and things. And this, I think they changed it. So what am I trying to say? So related to this production, the PBOC is buying bonds, intervening. But why? Why are they buying bonds if there's a rally in government bonds? That's what I'm trying to say. This intervention is puzzling because there's no shortage of demand for government bonds in China, which are in the middle of a massive rally. The speculation is that the PBOC is buying the bonds to dump them at a later critical juncture. But that just sounds like total speculation to me. It doesn't make any sense. Why not just borrow more? If you want to dump bonds later, just borrow a lot at that time. But anyway, this is total speculation. I think they're just trying everything, trying to get their banks to lend into productive uses. Going back a couple of years reporting on this, what the banks do in China is they just lend to each other. So they're dictated by the CCP, make this many loans. Make $10 billion in loans this month. But they don't have anybody that they want to lend to because they know these borrowers are the economy's collapsing. So what do? They lend back and forth to each other. So it doesn't work. You can't dictate this. You can't centrally plan this. And it's so funny when you realize these things, and then there's people out there that say that the Fed is in control of everything. Everything is a micro planned event. we're going to do it's not just 4D chess, it's quantum chess. They're playing quantum chess. Every move that they make is like thought out to the nth degree. And if it doesn't go the way that your first initial thought process is, this is why they're doing this, it's because they've thought 3 moves ahead of you before. Like, it's just ridiculous. This just sounds like total and utter flailing by the PBOC and the CCP to try to boost something, to try to boost some lending, some productive economic activity, some productive lending. They need to boost domestic consumption. They don't know how to do it. They're flailing. So anyway, that's it for China. Let's go on to US PCE, and then I'll take a look at your questions and comments. All right, US PCE at consensus for July. This was really a non-event for the market. But what do I say here? PCE has a much larger lag than CPI, where CPI is released in the first week to 10 days of the following month. PCE comes in the last few days of the following month. Therefore, the data is already reflecting changes that could be a result of the market behavior 8 weeks ago. So yes, PCE plugs into all different things, but it's already 2 months old by the time it comes out. And if you're using PCE trends over the last, say, quarter, you're using 6-month-old data already. Okay, so it's just something to be aware of. Despite this, let's look at the July PCE data, which is the quote-unquote inflation metric used by the Federal Reserve. And you can see just right here, people are saying, look at this reacceleration. Just this little blip here at the very far right. Of course, they said that here too. They said that here too. And they said that here, and maybe here in this little one, and this little one. Every single time that this has had a little blip, they're like, look at this reacceleration. And they've been wrong every single time. It's been transitory. If you look at this and say it's not transitory, I want some of that you're smoking, because this is up and down. And think about this. So this is a 12-month moving indicator. Every 12 months, a previous month from last year falls off, right? So it's a 12-month cumulative move. It's not a moving average. It's cumulative over those 12 months. And so 12 months gets baked in, and then 12 months to come out, and we're pretty much right on the backside of that. Yeah, it's kind of lagging here a little bit. It's trailing off, but it was up and down. It couldn't have been much faster. Okay, so the headline, PCE was 0.155%, or 2.5% year over year. Core was 0.18%. All right, so that did beat forecast by a little bit, because it was below 0.2. So they round this up to 0.2, and this one as well. But when they add it together, they're not adding the rounded numbers. So what they do, let's say, January plus February plus March plus April. When they add them together, they're not adding together the rounded number. They're adding together prior to rounding. So that's why you can get some of these misses, even though the market was on about 0.2%. It missed slightly to the downside, so that can make this year-over-year calculation different. And that's exactly what happened. It was a little bit better than forecast. The important part, in my opinion, though, is that these numbers came in right around the sweet spot of 0.166%. And what's important about that is the 2% target. If you take 2% divided by 12, that's how they figure CPI, or year-over-year CPI, year-over-year PCE. That's how they figure it. And if you want to undo that, you say 2% divided by 12 is 0.166. And look where headline was. Under that, core was just above that, but really it's right in the ballpark of their 2% target. So this fits right into Powell's near promise of a rate cut in September, because they pretty much are at their 2% target right now. Even though there is some lag in these year-over-year numbers, they are already at their 2% target. Okay, let's check the comments, then we'll move on to the charts. Dex Invictus back with us. Michael Tenney. Do I still write for Bitcoin Magazine Pro? No, I do not. That was, I left them, or they let me go when they switched over to their new format that they have. And that was in July. So I haven't been writing for them for 6 months. I did just get picked up as a Forbes contributor. So I will be writing for Forbes on a regular basis here in the future, starting this month, I'm guessing. And let's see. That is, I've doubled my efforts on my own website, so you can check out bitcoinmarkets.com for all the free stuff there. All right. Happy Monday, Dex. Yes, Monday, fundamentals report day. So if you guys are new to the content, join me every Monday for these big live streams about all the sectors of Bitcoin, covering everything. And if you think I'm wrong, put it in the comments. I'm not scared to be called out about these things. I have very strong opinions about macro and Bitcoin. I'm not saying they're guaranteed to be right, but I think it's pretty convincing. And it's based off of very solid and historical data. So, okay, Rafael Pena. Ansel, what aspect of Bitcoin is most important, would you say? The fixed supply of 21 million or the difficulty adjustment? Both are genius. I mean, it's a good question because everything fits together so well. 21 million, there is reason behind 21 million, and it has to do with the integer overflow in code. I'm not super familiar with that, but I do know that there is something with the number of Satoshis, not the 21 million, but the 21 quadrillion Satoshis, or however many it is, that is the way with the issuance schedule and everything. It comes out to have to do with the integer overflow, and he figured that out, and it just worked out to 21 million. Let's see what else. The difficulty adjustment, that was kind of the thing that he added most. I think that was new, but I don't know if that would be the most important. If you don't have 21 million, if you don't have a fixed supply, so a lot of people talk about tail emission. Okay, and this is the reason why you can't have tail emission. Tail emission is where you have a decreasing block reward, like a halving, but then it stops at a certain point and it never gets to zero. Okay, so then there would be maybe one Bitcoin mined every year forever, and that would be like a tail emission. The reason why you can't have that is because on a competitive basis, a Bitcoin fork could be made that would not have that, and it would be fixed supply. And why would you hold a tail emission Bitcoin when you can hold a Bitcoin fork that has no tail emission? It has no inflation. So also the deflation works the same way. So a lot of people think deflation is good. Well, that's because they conflate deflation and prices. Deflation is not lowering prices. Deflation is a shrinking of the money supply, over time shrinking. And that's bad because that doesn't allow for credit markets. It doesn't allow for as much economic growth. And so deflation would be hard forked into a fixed supply. So fixed supply is the thing that would be figured out by the market anyway. So yeah, that's very important. But proof of work is very important. I mean, all the pieces are very, very important, and they're put together in a way that without any singular part of Bitcoin, it wouldn't function properly. So that's what I would say. They're all equally important. Also, aside from Zuckerberg admitting and regretting censoring others during the pandemic, Microsoft fired their DEI staff. Oh, interesting. I think they know what's coming. Drill, baby, drill. Yeah, I mean, I'm sure they do. I know that there's accounts now that are going around and reporting on DEI departments for different companies. For instance, Tractor Supply is one that I go to for chicken feed and stuff like that. And they had a report out about their DEI staff and their DEI department and their DEI practices and how they're this major woke company, even though who's their demographic customer. is not woke people. Conservative rural people is Tractor Supply's target market. And so um, there was backlash against them, and they switched it too. Harley Davidson going through the same thing. So there's a lot of backlash against DEI. But on the tech side specifically, maybe I guess that was your point. Microsoft, yeah, that's great. I'm glad to hear that. It's going to go that way, because the way I see it is DEI. I see woke and global Marxists as not being efficient and not being sustainable long term. Just look at like demographics. Demographics are just not stable long term. So if you want to ever find stability, you cannot be that. So that's how you know that woke will end. That's how you know that all that other stuff. Dex Invictus, congrats on the Forbes. Yeah. I have CK to thank for that. He introduced me to the Forbes team, and they brought me on. So that was great. Microsoft even cutting DEI jobs. Oh, that's good. Always glad to hear that. Okay. Let me check Telegram, see if there's any comments over there real quick. Congrats on Forbes. Yeah. Yeah. Forbes is a good opportunity for the show and the content. All right, let's keep going with the newsletter. Make sure I have all this going. Okay, Bitcoin charts. So price is everything. If Bitcoin was going down consistently month over month, year over year for years, every cycle, then nobody would be here. Just think about how boring this has been over the last 6 months, and now extrapolate that out to years and years. No one would be here. No one would care about Bitcoin. So price is all that matters. It has to go up, or else people won't care about it. It won't be adopted. And one of the biggest problems, or not problems, but one of the biggest enemies of Bitcoin is actually a functioning economy. If the economy was booming, nobody would be looking for a solution to the dollar. No one would be looking for a solution to credit and all of this stuff. It's only a malfunctioning economy that brings in the demand for an alternative, which is what Bitcoin offers. So, okay, Bitcoin charts. Bitcoin chop is chewing up the mid-range support and resistance around the moving averages. We've talked about this previously. So people will put a lot of their orders around these moving averages. There's a lot of bots that do the same thing, a lot of trading strategies that use it. There's a lot of like proprietary trading algorithms that have somewhere in the code reference to the 50-day moving average, right? Where they won't be trading just off the 50-day moving average, but they'll be somewhere in the calculation is reference to the 50-day moving average. So these things are important. And we broke through, then we sliced back through it, and we're kind of down here muddling along. So this resistance and support has really weakened. What does that mean? Well, it means most likely we can go right back through it to the upside and not have to fight it. Okay, because all of that resistance is now taken out. If you recall the theory behind moving averages, okay, I just talked about that. Price can move more easily through those areas of previous support or resistance. What we are setting up right now is a rapid move to the top of the range, catching many shorts off sides. So a lot of people probably think that this is going down to the bottom of this range. You can also make this a channel as well, but people are thinking we're going to go down to the bottom. But no. We're going to slash right back through. This is what I think. We're going to slash right back through to the top of the range. And then we're getting up here to 66, 67, 68,000. We start hitting some, liquidations. We start squeezing a bunch of the shorts, and that can happen very, very rapidly. Stand by. All right, back with you again, kids. All right, so what was I saying? Back at the top of the range, squeezing the shorts and starting ticking away some of those liquidations that are up there at the top of the range. All right, let's continue down here. The 6-month heat map alone shows $10 billion in liquidations at 70,500, 12 billion at 72,500, not to mention all the other levels around those. So just these two bright yellow bars are 10 and 12 billion dollars worth of liquidations, and that does not include all these other lighter green bars here that might be 1, 2, 3 billion in liquidation. So that is a bunch of liquidity up there for the price to go and get. An interesting chart forwarded by Point on Telegram from Yoda SKK on X shows many powerful similarities with this time 11 months ago. Okay. I can't make that bigger, can I? Jeez Louise. So I guess you can see here, this is the 100-day moving average, this purple line. The white line is the 200-day moving average, and this is on CME specifically. This is currently, but if you go back to last year, just 11 months ago, so September of last year, we have the 200-day moving average coming in, acting as support, just like it is now. The 100-day coming down, the spread tightening, and then boom, we break out to the upside. So we are pretty much right in this last leg of this type of fractal from last year. Now, if you add the 50-day moving average, you get my chart here. I made this chart after seeing that last one. And the 50-day moving average comes down below the 100-day, kind of touches the 200-day, and then goes back up as the price is pinching, and then it pops out. Same exact thing is happening here. 50-day below the 100-day, price is pinching right in here, and we could have a breakout. So this is very interesting, the way this is working out to be almost identical to last year. And if this is the case, then we're going to have some major price movements. I say if this plays out, which is a possibility. I think I don't want to say it's a base case, but it's pretty close to a base case for the price here. And we should expect some fireworks this week, as early as this week, going into next week. We could see some fireworks. Now, remember, I've said this last week in my content on my writings and stuff, that with the halving moving forward, we can see some of those typical Q4 gains moving into the end of Q3. So halving going from May to April, we could see the October start creeping into September, right? So we could be right there on the edge of this. And yeah, so that's that chart. Overall, September is shaping up to be critical. And I've been trying to pound this. This month is very, very critical for Bitcoin, which I have written elsewhere on this blog last week. The jury is still out on a recessionary impact on the macro environment. So are we going to get a recession in the US? Is the recession going to really affect Bitcoin? Typically, stocks, are affected negatively by the beginning of a recession. But if it's not a hard recession, if it is like a shallow recession, then it might not affect stocks that much. It might not affect Bitcoin that much. And so we still have to be watching that and gauging that, how that's developing. But anyway, as of now, the pre-recession trade continues. Long Bitcoin, stocks, and bonds. And this is the thing I've been talking about since this time last year for 2024. I was saying, you need to be long Bitcoin, stocks, and bonds. Bitcoin has been range bound, but a breakout becomes more likely with each passing week. Extremely similar fractals from 2023, the lack of mid-range support and resistance, and the liquidity screaming to be tested at the all-time high. That all creates an atmosphere that could result in an explosive move higher for price. So that's all I have for that. I'm seeing 242 people tuning in. If you are on Twitter, you can jump over to YouTube and Rumble. The links are in my pinned tweet. And yeah, like, comment, subscribe. I go through this every Monday. I go and put out a newsletter for the entire Bitcoin industry, all the different topics, headlines, macro Bitcoin headlines, go through price, mining, layer 2. If there is some stuff for layer 2, that's a pretty slow part of the industry. But yeah, join me here every Monday. You can go to bitcoinmarkets.com, sign up to become a free member, get those free newsletters, or you can decide to support my content there as well. I appreciate everybody that does support. Okay, let me take a look at comments. Not seeing any new comments. Let me jump over to Telegram, see if anybody put any other stuff in there. Spagball, I will answer that later. Okay, just some inside Telegram jokes there. Let's go to the next section now. Make sure this is maximized for Telegram. Okay, next section is mining sector. Let's go over some headlines. So a solo miner finds a block. And if you're watching this, you're not new to Bitcoin, but if there are those one or two people that are new to Bitcoin watching this, a solo miner is somebody that is just mining on their own. They're not a member of a large public mining pool where you pool a lot of different hash rate from a lot of different miners, and then you split the profit or the reward from the Bitcoin network. Solo miner is just doing that all on their own, so they don't have to split it with anybody. But they were a solo miner that is 40 petahash, reportedly mined a block. And so it comes out to be about 1 in 16,000 blocks this person should win, which isn't that crazy. I mean, there are some solo miners that I don't know if they were like mining on a Raspberry Pi, but they were mining with something extremely small, not even measured in petahash, not even probably measured in terahash or whatever it was. It was a very, very small miner, and they hit on a block just a couple years ago. I think it was like a 1 in maybe 16 million chance, and they got it. But this is, if you work it out, you can see with this hash rate and the current difficulty that you should get about 3 blocks a year. So very interesting here. This gives hope to a lot of solo miners out there when this happens, but it's great. I like it. Bitcoin miner reserves halted sell-off. Once again, we check on the Bitcoin miner reserves, and we see that the bottom is so far holding. There is an obvious change in direction here. While this is not directly represented in price, it signals a change in the solvency and confidence of miners. So you can see here, Bitcoin miner reserves have been selling off for a while, really accelerated here around the ETF launch and kind of starting to make a move higher. But if you consider that this with price, overall, it's an inverse correlation. You can just visually see that. But if you dig down here into some of these smaller moves, there is periods where it's inverse and there's periods where it's direct. And so over the long term, you can't say anything. So really, I should have just taken this price off of here and showed that the miner reserves are increasing, and that should signal confidence and solvency of the miners at this price point right here. Okay. Next topic here is hash rate and difficulty. Shown is the 7-day moving average of hash rate estimated using block times and difficulty. Hash rate has remained strong despite price weakness, and difficulty recently adjusted up by 3%. So you can see the pink line is difficulty. It was some big moves up here, then down 1, and then back up 3%. Not an all-time high difficulty, but fairly close. It's actually the second highest difficulty that the network has had versus 2 difficulty epics. I don't know what you would call them ago. But overall, I mean, this is fairly strong considering the price of Bitcoin and the halving and all of that stuff. The revenue for miners is going down. This is very strong performance. So the miners are seeing something. The miners are very confident. When price does start to moon, we're going to see a lot of pent up demand from miners. Miners that are turned off right now, they're the marginal, more expensive equipment to use. They're going to all come back online, and hash rate could really soar pretty quickly once price starts moving higher this time. Okay, So that was Hashrate Difficulty. How about mempool? Mempool has been extremely quiet and flat over the last week. Nothing significant to report here. No sign of building uncertainty or worry in the market whatsoever. That being said, it is not building major confidence either. So just look how flat that is over the last week. Very, very flat. Nothing really to report at all for the mempool. So, and layer 2 is nothing significant to report. Down here at the bottom, I have, in case you missed it, this is all my posts from the last week, so check it out. Premium content here. September price forecast competition. Let's click into that. So this is for the $5 members. You guys can join and make a forecast for the end of the month, and you have a chance to win $20 in sats for the person that's closest. So you can win back 4 months worth of your membership here. But we also have a Hall of Fame. If we go to the Hall of Fame, we can see going back to 2019, we've been doing this, and we have all sorts of winners, multiple time winners here, and all the names here. So you get a chance to get your pseudonym or your real name, if you want, up on the Hall of Fame. You can also just have fun with that and give people shit. Dave S. has won it, I think, what was it, 4 out of the last 6 times. And he's been very nice about it. If I were winning it 4 out of 6 times, I would be talking shit on Telegram for sure. But anyway, that is for paid members at the $5 level. Let me see. Let me check one more time for comments and see if we got anything else coming in. I'm not seeing anything. So 255 people watching. That's awesome. If you're watching on Twitter, jump over to YouTube, Rumble, or Telegram. On YouTube and Rumble. Like, comment, subscribe. It helps me grow, helps me get monetized on YouTube. I was just going over the story about how my in the Telegram pregame, how my last channel on YouTube got just totally deleted, like in the middle of a stream. And I've been trying to build that up. So I appreciate you guys going over there and subscribing, get me up to 1,000 subscribers and getting my channel monetized. But okay, that's going to be it for today, guys. Thank you very much. And I will see you on the next one. Bye.